We do have breaking news when it comes to New Zealand GDP numbers just crossing the Bloomberg, and the economy has fallen into a technical recession with that decline of 0.1% for that GDP seasonally adjusted quarter-on-quarter number from the fourth quarter to the first quarter. That, of course, slipping from what we really saw a steeper contraction in that previous quarter. Year-on-year, that's a gain of 2.2%. That is also softer than expectations of 2.6%, matching the previous quarterly gain of 2.2% as well. Let's get a closer look. Paul Allen joins us now. So there was a pretty huge margin of uncertainty here, but we are starting to see those 525 basis points of hikes starting to bite.
Yes, indeed. The RBNZ went really hard, harder even than the Fed. The cash rate in New Zealand currently 5.5%. So that's clearly had an impact here. But you're quite right. Lineball called this one. We had 9 economists of the 16 surveyed predicting this. The other 5 thought we'd see an expansion. Even the Reserve Bank of New Zealand expected a very modest expansion this quarter of 1/3 of 1%, but it did not happen. In terms of reaction to this, not a great deal so far. The stock market hasn't really blinked. Kiwi dollar trading a little bit weaker at the moment, 62 cents US. But a number of other factors beyond the tightening at play here. There was, of course, that devastating cyclone that struck the east coast of the North Island earlier this year, Cyclone Gabrielle. The cleanup continues after that. But then on the other hand, there's reasons to be optimistic as well. Of course, the unemployment rate's still at a record low. Immigration very strong. Tourism bouncing back strongly also. So this could be a short and shallow recession. We'll have to see where we go from here.
Perhaps that's the reason the IMF just this week said that New Zealand shouldn't be cutting rates for a prolonged period. So I guess what are the implications for the RBNZ here?
Well, the RBNZ had already signalled it was done. That came as a surprise to a lot of people at the last meeting, but it said, nope, that's it, we're finished. And it's content to let the lagging impact of that 525 basis points of tightening that we've seen so far now play out. And of course, there could be more to come because a lot of mortgage holders are now going to roll over and refix at higher rates. Other issues at play here as well. We have an election year in New Zealand this year, so there will be a political dimension to this. The well-worn phrase, it's the economy stupid, so expect some political mileage to be made out of this also. This recession's come a bit earlier than the Reserve Bank predicted, though. They did anticipate one in the second and third quarter. It's come in the first quarter instead. The next meeting is on July 12, and a week after that we get inflation numbers as well. So next month we'll get a bit of a better sense of what the RBNZ does next, although it could well be nothing.